Welcome back, everyone. Thanks for joining. In today's episode, we're going to go over my portfolio. I'll be explaining why I'm buying more restaurants for 2022 and why I'm so bullish specifically on this industry for next year. We also have news that Nancy Pelosi, the Speaker of the House, just purchased bullish options on a number of companies. Now, Nancy has a knack, let's say, of having particularly good insight and a good feel for what direction companies are going to trade. So we're going to look over the companies that she's bullish on and the timeline of when she or her husband thinks that these stocks will go up. Now, we also had some big news this week. This guy right here, Christopher Volk, he was the co-founder and CEO of Store Capital. Later on, he was pushed to the executive chairman role. And then just recently, this week, he was terminated. He was fired from his position as the executive chairman, quote, without cause. So they're not really saying any reason why. We don't really know what happened, other than Christopher Volk has been fired from Store Capital. Now, this is a little concerning for me because Store Capital is one of my larger holdings. I have currently $19,000 in this company. And part of the reason that I was bullish on this company was because of Christopher Volk. I thought that his insight and know-how into running this company was exemplary. So the fact that he's now been canned, he's been terminated from his position, and anything to do with Store Capital is something that I think we need to discuss. So we're going to be talking about this, and I'll share my thoughts of how I'm viewing this. And on today's episode, I'm also going to be giving an update on the Elizabeth Holmes trial. It is dragging on like crazy. So we'll go through where this trial is at, what's happening with the deliberations, and where I think this may end. So as always, we have a lot to jump into in this episode. If you like this type of content, you can support the channel for free by liking the video, subscribing to the channel, and hitting the bell icon so you get notifications whenever I post a video. And if you want to support the channel financially, you can check out the Patreon. It gives you access to a private Discord community with over 2,000 active members and Qualtrim Insights. This is a stock search tool that gives you the fundamentals of a company all on one page. So if you want to check out the Patreon, I'll put a link to it in the description of this video. All right, let's go ahead and jump right in. This is my passive income portfolio. Most of you are familiar with it. I show this transparently every single week, week by week, good or bad. And I'm going to continue to do that all throughout 2022. Now, when looking at my portfolio, I'm always choosing which companies I want to build up in the future. Which ones do I think will have good value next year? Over the past year, the tech category has been a huge outperformer. These two companies in particular have really helped lift my entire portfolio. With Apple, I'm at $24,000 in gains, and with Microsoft, I'm at $8,800 in gains. And I really built up both of these holdings in 2021. That's really when I started adding heavily to these positions. While Apple's a great company, it's trading at a 32 PE ratio, and I think that that's pretty expensive given Apple's growth. Microsoft has been another huge winner this year. It's up 54% with very little volatility. Right now, Microsoft's trading at a 37.4 PE ratio, and I think that's a little expensive, even considering the flawless fundamentals that Microsoft has. So as of right now, these companies have done great in 2021, but I think their valuations are a bit stretched and it will be more difficult for them in 2022. Out of all these categories of tech, consumer, real estate, fintech, restaurant, and healthcare, I think that restaurants are going to have a particularly good year in 2022. Part of that is thinking about what you're buying when you're buying a restaurant. Restaurants, for the most part, are service-based and experiential. People like to sit at Starbucks and do some work while they drink their coffee. A lot of it is experiential. Texas Roadhouse is similar. You're going there for the service, the quality food, and the experience. Even companies like Restaurant Brands International, the owner of Burger King and Popeyes, is to some extent still an experience. You're still going out of the house most of the time to get this food. And I think that restaurants across the board will have a very strong 2022. And there's a couple reasons that I believe this. First of all, the person that's almost always negative bringing us bad news, Dr. Fauci, he's now predicting that Omicron COVID wave will peak in the US by the end of January. He thinks this thing is going to be peaked by the end of next month. For the most part, experts believe that Omicron is working its way through the US very quickly and it will soon be on a big downtrend. We also have a lot of positive news in addition to this. The World Health Organization is forecasting that the coronavirus pandemic will end by 2022. Now, if you believe that the pandemic does have a decent chance of ending next year, then what will happen is demand will shift. And we're seeing that happen already. That Bridgewater report showed that demand right now is heavily concentrated into goods, things that you can get at Costco or Amazon. These are products that people are purchasing with their excess cash. The amount of demand for consumer goods right now is way beyond historical trends, but it's now starting to transition. The other graph that I can show is based on US services. This includes things like restaurants. That's a huge part of the service industry. Well, in 2020 with the pandemic, as we know, the demand for services tanked tanked because everyone stayed home. They didn't feel safe going out. But as we make our way through the pandemic, service demand should not only come back to normalized levels, it should spike way above normalized levels. So with demand shifting from products and goods to services, I think that restaurants are going to be one of the big beneficiaries of this transition. And Texas Roadhouse isn't the only restaurant that I'm looking at building up. Another one that I'm considering is Starbucks. I think this is a high quality restaurant business. Domino's Pizza is another extremely high quality dividend paying company. Restaurant Brands International, the owner of Popeyes and Burger King, is another one that I'm looking at. They just recently announced they're acquiring Firehouse Subs, which I think is a really good acquisition. So I'm going to be doing research and analysis on different restaurants and their valuations and see if any of them make sense to add to my portfolio, because I think that restaurants across the board are going to have very strong earnings in 2022. And I'll let you know in the future if I choose to add any of these stocks to my portfolio. Now moving on, we have the headline news that Nancy Pelosi and her husband purchased call options on a number of companies. Let's go ahead and jump through these. Now to view these actual transactions, we can look at the periodic transaction report, which is what they publicly have to report because she's a member of Congress. The first on the list is Google. She purchased 10 call options with a strike price of $2,000 and an expiration date of September 16th, 2022. So basic summary of this is that Nancy Pelosi or her husband believes that Google will be trading at a much higher price by September 16th of 2022. At some time between now and then, she thinks it's going to go up, and she's probably correct. Google is a company that has multiple aspects of it that are growing rapidly, whether it's Android or Google Cloud, or especially YouTube, which is seeing amazing growth acceleration after being around for a decade. YouTube really has no true competing service at this point. One of the most incredible things about Google's performance is the stock is up 70% year to date, while the PE ratio has contracted, not expanded. So Google's stock is growing like crazy while the PE ratio is coming down. Now next up, she purchased call options on Micron Technology. I think that Micron Technology is another solid bet. This company has a low PE ratio, it has lots of growth drivers, and it's the biggest current bet for the well-known investor Manish Pabrai. So Micron Technology is another one that I think she stands a very good chance of making a lot of money with. Next up, they're doing something that I think is a bit riskier. They're purchasing 100 call options on Roblox. So this is a more volatile company, but they do give themselves some more time. The expiration date is January of 2023. So unless Roblox really just performs terribly over the next year, they should be fine in this case as well. After Roblox, they purchased call options on Salesforce. Salesforce is a blue chip, high quality SaaS company with a very sticky business and in my opinion, a very wide moat. This one I think is also a very solid bet, and it recently had a pretty decent sell-off. It's down 16% over the past month. I think there's a very good chance this stock will be much higher by the beginning of 2023. So I think she also has a very good chance of making money with this bet. Now the last one is Walt Disney. They purchased 50 call options with a strike price of $130 and an expiration of September 2022. Now like I mentioned, with my bullishness on restaurants overall being in the service industry, I think largely the same thing applies to Disney. A lot of Disney is experiences, going out of the house, going on vacation, and I think that all of that stuff, plays, parks, and theaters will have a very good next year. The biggest threat I see with this play on Disney is if they happen to report horrible streaming numbers. If Disney Plus really begins to slow down to a stall, I think that will hurt the stock price. But I also think that's unlikely, and I think it's very unlikely for Disney to trade below 130. So overall, say what you will about Nancy Pelosi or her husband, they're doing pretty conservative bets on a lot of blue chip companies that I think will have a really good 2022. Now moving on, we have to discuss the big news with Store Capital terminating or firing their executive chairman and once CEO and co-founder Christopher Volk. Part of the reason I initially invested in Store Capital was because of Christopher Volk. It was because of his writings on Seeking Alpha, his in-depth explanation and articulation on their business strategy, his multiple interviews where he went on talking about the edge they have, the moat they have, how they're running the business. He was one that really explained how Store Capital works. So I invested a decent amount in Store Capital, and so far the returns have been pretty good. I've been pretty happy with this holding and its performance. But now they've outright terminated him. They've actually pushed him out of the company, and they're stating without cause, meaning they're not really giving us a clear explanation. Now, like many of the comments here, we can go on and speculate of what Christopher Volk may or may not have done, but the truth is we don't know. We have no clue why he was pushed out. There is no public information on why he was fired. And the question is, what do we do in this situation? There's the option to sell, which I think is fine if you want to take your gains and move your money into different companies. There's the option to hold or to buy more of it. Right now, I'm in the hold category. I'm holding on to the stock, and I'm waiting for more information. Even before this news, Christopher Volk was not serving as the current CEO. he had already been replaced for some time. And the current CEO, Mary Fedowa, was also a founding member of the company. She's been there since the beginning, just like Christopher Volk. So even though she might not be as public, so far I have no reason to believe that she's not as capable or able to run this company like Christopher Volk. So as of right now, I've done nothing with Store Capital. I've just held on to my shares, and I plan on doing that until we get more information. If I do get more information that leads me to a different decision, I'll let you know. Now moving on, we have a final update on the Elizabeth Holmes trial. The jury's still out. They're still deliberating the future of Elizabeth Holmes. Now experts try to nail down why the jury's taking so long, and they say my guess is her testimony, more than any other evidence presented at the trial, is causing the jury to struggle over whether there was intent to deceive or just an overabundance of optimism. Now they point out that this is speculation. It could go either way. They say until a verdict is reached, there is no way to know exactly why deliberations have dragged on or what it means for the case. While that's true, I think it is possibly a good sign for Elizabeth Holmes that it's going on for so long. It means that the jury's undecided. They're not convinced. And in my opinion, that's a good sign for her. After reading extensively about her case, it's abundantly clear to me that she was flat out lying on multiple occasions to investors. This wasn't optimism. She did multiple things that were intentionally deceiving. So I think it'll be interesting to see the final verdict after this case finally comes to an end. Now that's all for this episode. If you enjoyed it, make sure to like the video, and I'll see you in the next one.